Welcome to Mercer's video on how unit pricing works within KiwiSaver and some superannuation schemes. Any advice contained in this video is of a general nature only and does not take into account your objectives, financial situation, or needs. Prior to acting on any information contained in this video, you will need to take into account your own financial circumstances and seek advice from a financial advisor if you are unsure of what action to take. Unit pricing is used by investment schemes like KiwiSaver, retirement savings, and other unitized schemes to determine each member's share of an investment portfolio at a given time. In a unitized scheme, each investment portfolio is divided into units of equal value and allocated a unit price. Unit pricing is a way of providing all members with real returns. Every member is credited with the amount of investment earnings or income attributable to their time invested in the investment funds. In this way, you're generally able to see what your account is worth at any given time by multiplying the number of units you have by their value. If your scheme is unitized, generally you should be able to see how much a unit is worth on the website or when you sign in to your account online. Let's take a look now at how unit pricing generally works. When you make a contribution to your account, you are buying units in the investment options you've chosen. When your contributions are allocated to the investment options, they join a pool of investments alongside other members invested in that same option. To keep track of the value of each person's share, the total money is divided into units of equal value. Units are then allocated to your account according to how much you have contributed and the buying unit price at the time of the transaction. Unit prices are calculated by dividing the total value of the investments in each investment option on any given day by the total number of units on issue for that investment option. For example, if an investment option had $1 million invested in it after allowing for fees and tax, and there were 800,000 units on issue, then the unit price for that day would be $1.25. When investment returns are positive, the unit price will go up. When investment returns are negative, the unit price will go down. So when the markets fall, unit prices will also fall. The number of units you are allocated is calculated by dividing the dollar amount of the transaction, that is, the amount of contributions made to your account, by the unit price on the day of the transaction. As a result, if you are making the same contribution to your account in a falling market, you are actually buying more units than before. Let's look at an example. Alex is paid $60,000 a year. Each month, 3% of his salary, or $150 per month, is paid into his investment account. At the time Alex makes his first monthly contribution, a unit in his chosen investment option is worth $1. His contribution of $150 purchases 150 units. When Alex makes his contribution for another month, the price of units falls to 60 cents. For the same contribution of $150, Alex's contribution now purchases 250 units. If we take another snapshot later again, a unit in this investment option has now increased to $1.50, so Alex's contribution of $150 would now purchase just 100 units. As a result of purchasing units when the market was low, Alex was able to buy a substantially higher number of units than when the unit price increased, for the same contribution amount. When the market improved, the 250 units Alex had purchased earlier for 60 cents each when the markets were going down would be revalued at $1.50 each and would be worth over $375 instead of the $150 he purchased them for. While trying to time the markets can be tricky and is not recommended, making extra contributions to the scheme when markets are low could help you benefit in the long run as markets generally recover. As always, it is important to seek advice from a financial advisor before making changes to your investment strategy. You should also remember that past performance is not a reliable indicator of future performance. When you are making a withdrawal, you are selling units. If you are using unit prices to estimate a withdrawal, remember unit prices can change daily, which means the amount can go down or up daily. The unit price used to determine your withdrawal amount is the unit price that is available at the time your withdrawal is processed. You will not receive a unit price for the date earlier than the date your withdrawal form or a switch request form is received. It is also important to note that unit prices for each business day are generally available 2 days later. This means that if you are making a full withdrawal, the total amount you receive may vary from any earlier balance estimate provided. KiwiSaver and some retirement savings schemes use unit pricing to determine each member's share of the scheme's assets on any given day. In a unitized scheme, each investment option is divided into units of equal value and given a unit price. The unit prices are generally calculated daily on business days. When you contribute to the scheme, you are buying units, and when you withdraw money, you are selling units in your chosen investment option at the unit price applied at the time. When you change between investment options, you are buying and selling units in the respective investment options at the prices applied to each of those options at the time. The unit price for each portfolio goes up or down in line with market movements. If you are buying units when the markets are doing well, you are buying units at a higher price, but when the markets are not doing well, you may be selling units at the reduced price and locking in the losses.